This lecture will discuss the dividend distribution policy. So for which companies dividend distribution policy is mandatory. Okay, and what does the dividend distribution policy contains? So we'll discuss that. So first, for which companies dividend distribution policy is mandatory? For which companies dividend distribution policy is mandatory? It is mandatory for top 1000 listed companies. Top 1000 listed companies. Dividend distribution policy is mandatory for top 1000 listed companies. Sir, how I'll take this top 1000 listed companies? How shall I calculate this top 1000 listed companies? So based on market capitalization. Based on market capitalization. So top 1000 companies based on market capitalization. Sir, what is meant by market capitalization? What is meant by market capitalization? Number of outstanding shares. Number of outstanding shares. Number of outstanding shares into market price as at 31st March. Market price as at 31st March of the year. Okay, so this is how we'll decide for which companies dividend distribution policy is mandatory. It is mandatory for top 1000 listed companies based on market capitalization. So how the market capitalization is determined? Market capitalization is determined based on number of outstanding shares into market price as at 31st March. Okay, so this is how the market capitalization is determined. For this company's dividend distribution policy is mandatory. Next, what are the contents of the distribution policy? So what to be included in the dividend distribution policy? What to be included in dividend distribution policy? What to be included in the dividend distribution policy? Number one, internal financial parameters. Internal financial parameters. Okay, internal financial parameters. Okay, so what are the internal financial parameters? That means based on the profits. Okay, how much profits the company has, first issues, how much the profits company has. Obviously without profits company cannot declare a dividend. How much profits company has, that is the first thing. Okay, company got good profits. Is that profit realized in cash forms, or is the profit lying in the form of debtors? That is important. Therefore, how much profits company has, how much cash flows company has. Okay, if the first question is, if the company does not have adequate profits, dividend will not be paid, fine. So if the company has an adequate profits, then only company will pay dividend. So first, then we have to check cash flows, whether the profits is realized in the form of cash, whether the company has an adequate cash flow or not. If company got good profits, whether the company has adequate cash flows or not. Next, if the company has adequate cash flows, what is the financial obligation towards the lender? Current year, after paying interest only, I'll calculate the profit, I'll calculate the cash flows after paying interest, bank interest. But how about the future? How much future interest I have to pay, how much principal amount I have to pay, whatever the cash available. If I pay the entire cash as a dividend to the shareholders, in the next year, if I did not get profits, how can I repay my loan? How can I pay interest on the loan? That we have to consider. That means not only the profits, not only the cash flows, what is the financial obligation? What is the financial obligations? Okay, so present financial obligations, present financial obligations, present financial obligations we have to consider. Sir, whether do I get a current, whether I got good profits in the current year? Yes, sir. Whether that profits are realized in the form of cash? Yes, sir. I have good profits and also have good cash flows. How about the future financial obligation? Do you have more financial obligation in futures? If it is so, retain the cash. As simple as that. If you have future financial cash outflows, financial obligations, then better retain the cash flows. Even though you got the profit, even though you got the cash, better retain it, better conserve it, because in the next year I have to pay a loan amount. Therefore, I have to retain it. No, sir, there is no much future obligations, normal future obligations that I can pay with my regular cash. Okay, then you can pay. So what is the present financial obligation? Okay, next, future business opportunities. Future business opportunities. Future business opportunities. Sir, I got a good profits, I got a good cash flow, I don't have much financial obligations, I don't have much outstanding loans. Can I pay entire cash? Okay, at present you don't have much financial obligation. Do you have any expansion plans in future? Do you have any growth plans in future? If you want to, if you are having good business opportunities in future, and if you pay entire cash right now, what happens? How can you start a new business? How can you expand your present business? If you don't have future business opportunities, then you can pay dividend. Then you can pay dividend. That is what the point. future business opportunities. Profits, cash flows, present financial obligations, and future business profits. Sir, I got good profits. Those good profits are realized in the form of cash. Okay, I don't have much future financial obligations. Okay, so I don't have much financial obligations, and I don't have future business opportunities. Then I can pay dividend. Sir, I have a future opportunities. I have a future business opportunities. So just because I have a future business opportunities, do I avoid the dividend? The answer is no. Sir, I got a profits. Profit is realized in cash. I don't have much financial obligations. I do have a future business opportunities, but my cost of borrowings is less. My cost of borrowings is less than the cost of equity. Then I should pay dividend. Then I should pay dividend because I can borrow a loan. Even though future business opportunities is there, but still if the cost of borrowings in the market is less, I can take a bank loan. I don't need to conserve this cash. I don't need to conserve this cash. Therefore, cost of borrowing, marginal cost of borrowing. What is meant by that? Marginal cost of borrowings. Marginal cost of borrowings means new borrowings. Marginal cost of borrowings means new borrowings. Profit, cash flow, present financial obligation, future business opportunities, marginal cost of borrowings. So even though I got good profits, even though I got good cash flows, even though I don't have much future business obligations, even though I have future business opportunities, but the marginal cost of funding is less. Therefore, I'll pay much amount of cash as a dividend to the shareholders. I don't bother about the future business opportunities. No doubt there are business opportunities, but I can get the bank loan at cheaper rates. Therefore, I don't need to bother about the future business expansion opportunities. Whenever future business expansion opportunities is there, yes, I can take a bank loan. I don't need to conserve the cash. Let us pay the cash to the shareholders as a dividend. Next, that is what the point. Marginal cost of borrowings. Next, so what is your return on invested capital? Sir, future business opportunities is there. On that future business opportunities, how much you are going to earn? How much you are going to earn? Sir, I'm not going to earn much on the future business opportunities. Then drop the business opportunities, pay the cash to the shareholders. They will invest somewhere else. No, sir, I'll get a good business opportunity. I can earn good investor. I can earn good return on the invested capital. Then you can conserve the cash. So return on invested capital, return on invested capital, return on invested capital. Okay, sir, I got the profits, I got the cash flow, I don't have much future obligations, I have a future business opportunities, but on that future business opportunities, I'll get less return on invested capital. Then why should I retain it? Better I'll pay the dividend as a dividend to the shareholders. Even though I have a good future business opportunities, but the return on expected opportunities is less, then I don't want to make use of that opportunities. Even though opportunities are there, I don't want to use it. Because the return is very less. That is what the point. No, sir, return is good, but how about the cost of borrowings? Marginal cost of borrowing. So based on all these parameters, you have to decide. These are the internal financial parameters which decide how much dividend to be paid. Next, other internal parameters. Okay, other internal parameters, like how the shareholders expectations are. Okay, whether the shareholders are expecting continuous dividend, whether most of the shareholders are retired people and they depend on regular income, dividend income. So I have to consider all these figures, all these things, whether most of my shareholders are retired people, they depend on regular dividend income, or whether most of my shareholders are universities or other endowment funds which need regular dividends to meet their operational expenses. Based on that, I'll decide how much dividend to pay. Other internal parameters. Next, external factors. Next, external factors. What are the external factors? Okay, how the government policy is going to be in future, so how the economy is going to be in future. Based on all these things, I'll say if the future economy is going to be recession, I don't have much business opportunities, then I'll pay. Then why should I retain the cash? I'll pay as a dividend to the shareholders. Therefore, I have to consider the government policy, economic situation, etc. All external factors I have to consider. Next, so based on all these factors, you will decide whether you want to pay the dividend or not. Okay, sir, after considering all these factors, I came to one conclusion. What is that conclusion? I want to pay less dividend, retain more. Less dividend, more retention. Less dividend, more retention. less dividend, more retention. After considering all these factors, I came to conclusion that yes, I want to retain, I want to pay less and retain more. Okay, now you have to explain on what basis you are, how you want to utilize this policy, how you want to utilize the retained earnings. That means company should have both dividend distribution policy, so not only dividend distribution policy, company should also have reserves utilization policy, a reserves utilization policy, or retention utilization policy. So if you want to pay more dividend or less dividend, you have some logic. So because of these reasons, I want to pay less dividend and retain more profits. Yes, good. You have given a justification. How you are going to utilize that retained earnings? That means retention utilization policy should also be there. That is the important point here. Though the heading says dividend distribution policy, but if you look at what the SEBI guideline says, it also says policy as to how retained earnings shall be utilized. Okay, that means not only dividend distribution policy, but also policy on utilization of retained earnings. You have given a good logic that you want to pay less dividend, you want to retain more. Okay, then you should explain how you are going to utilize that retained earnings. Are you going to keep those funds as an idle? That is what the point. Therefore, policy of retained earnings utilization, policy. I should include this also. I have to prepare both dividend distribution policy and also retained earnings utilization policy. For what purpose I want to utilize the retained earnings? For capital expenditure, etc., and all those things. Okay, right. So these are the things for top 1,000 listed companies, based on the market capitalization as of the 31st March of the year. They have to prepare a dividend distribution policy. These are the factors they have to consider: internal financial parameters, other internal parameters, external factors. They have to consider all these things. They have to prepare not only dividend distribution policy, but also retained earnings utilization policy. Next, disclosure of dividend distribution policy. Disclosure of dividend distribution policy. So where should I disclose the dividend distribution policy? You have to publish in the website, publish in the company's website. Dividend distribution policy you have to publish in the company's website. Dividend distribution policy you have to publish in the company's website, and such website link shall be included in the annual report. Such website link, okay, shall be included in the annual report, shall be given in the annual report, okay. So publish in the company's website, and the link where such details are published, okay, link where such details are published shall also be included in the annual report. Okay, link where it is published, shall be given in the annual report. The link to download the policy from the website, that should be given in the annual report. Okay, so this is how the dividend disclosure policy. So this is mandatory for the top 1,000 companies, top 1,000 listed companies based on market capitalization. Top 1,000 listed companies based on market capitalization. This is what is important. Now the next concept is, okay, so for other companies it is mandatory. Other than those, so they may disclose their dividend distribution policy on a voluntary basis on their website as well as annual report. Other companies also, they can disclose it, but that is optional for them. Other companies also, they can disclose it, but that is optional for them. Okay, so this is all about the dividend distribution policy. Regulation 43 of SEBI, listing obligations and disclosure requirements. Regulation 43A. Okay, there is a chance of testing this as a theory question, dividend distribution policy. Okay, so it's an important topic. Please go through it. Okay, thank you.